Welcome back. It's great to have you with us on SABC News Prime Biz. Tonight we're talking about the so-called investment strike. Now, South African businesses are sitting on a lot of cash, and there's a debate about how significant or serious the number is. Listed companies seem to be stockpiling an estimated 1.4 trillion rand now, according to research done by the Centre for Competition, Regulation and Economic Development. Some analysts believe that if there wasn't uncertainty about our politics and policies in South Africa, companies would be spending as normal, which would help to create jobs and lift South Africa out of its current low-growth malaise. Well, what's interesting, a law firm, Cliffe, Dekker, Hofmeyr, says that despite the current economic environment, activity levels witnessed by the firm's mergers and acquisitions practice actually remain stable. What does that mean? To discuss, we're joined in our Seapoint studio by the Cape Managing Partner at Cliffe, Dekker, Hofmeyr, Gasant, Orrie. Gasant, thank you for joining us. So despite all the bad news, you're saying that a lot of merger and acquisition activity is still going on. That's what you're seeing, and a lot of it comes through your company.
Good evening, Francis. Thank you for having me. South Africa is still seen as a very attractive investment destination by foreign investors. Despite what we're seeing in South Africa with Guptagate, votes of no confidence and the like, investors see South Africa as a relatively stable environment. We have a relatively strong financial banking infrastructure. We have a relatively reliable transportation system, as well as a telecommunication system. So, notwithstanding the economic and political uncertainty, investors see it as a relatively stable destination, and that, of course, fuels and gives reason for economic activity. It's a well-known fact that investors are looking for growing returns, and that the developing nations, included amongst those the BRICS countries, but in particular India, and of course also several African countries, have shown tremendous growth and showing huge potential for foreign investors to invest here. So it is seen as a very good destination still.
Okay, because we are so negative as South Africans, but I think we also see what you're talking about with the hot money. You're talking about the money that stays here, but we've seen with the rand, even with bonds, foreigners still investing in South Africa. Does that show that there's a sophistication in the understanding that foreigners have of how South Africa actually works?
I think so. Foreigners do, and any investor investing in any country, not just South Africa, will do a thorough due diligence, which of course will precede any transaction that they will enter into, whether it be South Africa or anywhere else. And that's of course where advisors come in, like ourselves, and companies with the support of advisors like ourselves and their own internal teams will do comprehensive due diligence. But the fact of the matter remains that, you know, I live in Cape Town, and I was driving along the beachfront towards the studio here, and you know, let's face it, it's a beautiful country, it's a beautiful destination. But apart from that, it's a country that offers tremendous growth and potential for investment. Again, if one looks across the world and one speaks to fund managers, they are looking for destinations, investment destinations that offer unique opportunities, which have proven to be opportunities that have shown the most potential for growth and the highest returns. And South Africa, I believe, presents such an opportunity for investors. We have, as I've mentioned, we have a stable financial system. I think we have an established culture of corporate governance, which has been enhanced by the introduction of, for example, our King 4 Code and corporate governance, which give investors a sense of comfort that when they're investing in South Africa, they can, with relative certainty, know that their investment is in a good place. Of course, we've had the introduction of other pieces of legislation, such as the Promotion and Protection of Investment Act, which came into force last year, 2015, which basically gives investors, foreign investors, the same protection as domestic investors. So foreign investors know that when they invest in South Africa, they will be treated equally, if you like, in the same way as a domestic investor would be.
Okay, Gasant, in brief, though, this is great news when we're talking about foreigners, but what about South Africans holding back? So we've got to talk about the 1.4 trillion rand. Do you think that the term being used, the investment strike in South Africa, is a valid term?
Francis, can you repeat the question? Sorry, I didn't follow you.
All right, I said it's good news on the foreign front, but what about South Africans who aren't investing? Do you think that the 1.4 trillion rand is serious, and is it viable to call it an investment strike?
No, I don't think so. One must obviously bear in mind that South Africa is, in some of the major sectors, is a relatively saturated market, has a relatively saturated market. If one looks at the retail sector, financial services, even telecommunications, we have a relatively sophisticated, saturated, matured market. Investors obviously are driven by increased or better returns, and they will look for opportunities elsewhere to invest if they don't get the returns that they can get in other destinations. So if it's more favorable to invest in other destinations compared to South Africa, they will go elsewhere. One must also bear in mind that local investors are obviously right here in South Africa, close to where the action is, and so that one would imagine that influences their decisions about where to invest and how to invest.
So they're more negative. Does that mean that South Africans, in finality, could lose out on the future opportunities, that we could lose out when the economy gets better, while foreign investors benefit from that?
I do think that there's a risk for that, of that happening. But, our top companies have very sophisticated systems and processes. They will interrogate, I suppose, every investment opportunity thoroughly. And if there's a good opportunity in the South African market to do something, they will obviously do it. The fact that we have uncertainty, though, in some of our in policy in certain key areas, such as minerals and resources, mining, telecommunications, for example, doesn't help. And South African companies will obviously keep a close eye on what is happening in the local market, but they will have to evaluate those opportunities in parallel with opportunities that are presented elsewhere in other jurisdictions.
Thank you so much for your time this evening. A very interesting discussion. Gasant Orrie from Cliffe, Dekker, Hofmeyr. And I guess, Peter, that means that it's not all doom and gloom. Foreigners still liking South Africa as an investment destination.
If there's one thing I've seen over time is that business and money will always go where money can be made. And they've invested in war zones, for crying out loud. So I think South Africa...
So not all is lost.
No, not at all.
All right, it's been great to have you with us on Prime Biz. Primetime News continues, however, after the break.